Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is one of our favorites. He does the weekly This Week in Charts for me now for, I think, two and a half years now. Aaron Basil of Carnivore Trades does an excellent job. I remember a couple years ago, everyone was like, why are you letting Aaron do the show? He's a nobody. I mean, he's pulled off so many great counter-cyclical trades. He was in on uranium. He's had a lot of winners over the last couple of years. I wanted to highlight his work for years now, that he was just an undervalued fusion analyst using technical analysis, cycles work, and fundamental research. So Aaron, thank you for joining me for this 2024 review and 2025 preview here on Monday, December 30th, 2024.
Thanks, Jason. Appreciate the kind words. Awesome. Always great to be back. Looking forward to it.
Yes, you're definitely one of the most undervalued technical analysts out there. I mean, you're doing a great job. This Week in Charts I think it's the most efficient 20 minutes, give or take, show that highlights the market wrap. You just do not see videos like this ever, because I'm sure you've watched some of these other videos that people just go, I used to watch these types of videos, and I told you, like, if you can do a show that's about 20 minutes and pretty efficient, rather than like some of these hour and 90-minute long. Some of these charts ones are 2 hours long here, and these webinars and chart videos that technical analysts used to put out.
Yeah, and people don't have, that's I try to, thank you again. I try to keep it, 15, 20 minutes or so. If I really stretch it out to 25, if there's something I want to talk about. But, you don't need to, those 45-minute, hour long. I mean, a lot of those guys are rambling, and, you really got to be setting time aside to watch all that.
Yeah, I can't remember, and I can't remember even half of the content on there because it's not efficient. But I remember almost everything that you highlight there. I remember that you think that oil's close to a bottom. I remember that you were calling like a bottom in the uranium market a couple of years ago. So you've had some really good calls. I think you were calling a bottom for the small cap rally, China rally. You've been calling these things over the last 18 to 24 months, pretty dead on with your cycles research and analysis. I want to ask you though about your opinion of 2024. What were the surprises that you thought were going to happen in 2024 and didn't happen?
I would say the first thing really right off the bat is like the first kind of half of the year, really more so the first quarter. Um, I was a little surprised at how much liquidity they juiced the market with in that first quarter. I was expecting, I wasn't particularly bearish, but I was expecting some sort of, you know, a deeper correction than the maybe month consolidation we got during the end of the year that really didn't even correct. It was just kind of a sideways move. We did get a dip into April, but I mean, just, like 6-7%. I thought we would have at least retested maybe 4,800 on SPX, and they really just juiced this tape all year long, and it did work out pretty well. I was looking for a turn towards the end of June, and we got that low May 31st, and we got long for that, and it was pretty good. And we had a good summer rally off of that, and we were able to get in near the August lows or around the August lows, and we did pretty well this year. But definitely that first amount of like first quarter strength really was not expecting that. And that actually kind of set the tone for me this year and saying, okay, well, this is a tape that's really strong. We don't want to fight this, and we want to be able to get in on the next dip if we can, because they're juicing this for an election year. And, that's exactly what happened. They juiced us up into the election, and we've been sputtering out a little bit since, but definitely I'd say that first quarter strength in the stock market was definitely, much more stronger than I would have anticipated.
Yeah, and that's despite a relatively stronger dollar. I think the dollar index has rallied substantially. That shows, I think, that the global economy is already in a severe recession, whether that's European Union, emerging markets, China. Those economies have been hit with like much slower growth, a lot of problems with taxes and regulation. You see these other central banks talking about they already started to cut interest rates long before the Federal Reserve Bank did. And then I would argue that a lot of that liquidity that the central banks, once they start cutting rates, they also start wanting to do quantitative easing or monetizing debt or some type of stimulus program for unemployment or jobs programs or infrastructure programs. And that liquidity, Aaron, I would argue it doesn't end up in a lot of those domestic economies like a lot of the people anticipated. Don't you think that liquidity starts to end up in like the S&P 500, Mag 7, Bitcoin? Maybe it ends up in places that these other governments and central banks don't expect them to.
Yeah, absolutely. Oh, I think maybe they expect them to, and maybe they're, having ulterior motives. But yeah, absolutely. And that's one of the things that I think really, and I believe we highlighted this a little bit, at least I remember doing myself at the beginning of the year. Last year, I said, this is one of the positives here, even though I'm kind of looking for some little bit of correction in quarter one, which didn't happen. I said, one of the positives, though, that could fight against that is these emerging markets, these foreign countries are so just gung ho about the NASDAQ. They're getting out. And you look at, like you said, the dollar's been rallying lately, and that just makes the NASDAQ more attractive to them. I'm not saying the market's impervious to a correction. We can talk about that in a minute, but it certainly is a tailwind. I mean, the dollar index is, at multi-year highs. I think going back to 2022, right now we're at 108.07. Last time we were up here was November 2022. So yeah, it's definitely ending up in U.S. markets, I think. And yeah, like you said, possibly in Bitcoin and stuff. We've had a few kind of wobbles and kind of scares. I think Bitcoin has utility in that. It is there was people worried about the carry trade, leverage short vol in August. I was less so concerned about carry trade, more leverage short vol, but you did see Bitcoin. I think maybe you could argue got a bid there because of that, so quickly.
And also in the US dollar gold price, I mean, because central banks were still large net buyers of gold in 2024 outside of the G7. And then you had a huge spike starting in October, I think, of 2023, and it carried through a good amount of 2024. There was brief periods, I think, where the People's Bank of China officially stopped buying, but they probably weren't stopping buying. And then the retail investor in China and other parts of Asia, India, Japan, Korea, Thailand, Vietnam, maybe they took a break from buying physical gold and silver, but those other Asian currencies, especially the Japanese yen, were weak against the dollar. So the gold price was also strong. The cross currents, Aaron, I think this is important too. We're just seeing like a lot of data points, a lot of news articles that a lot of these Main Street businesses that are, let's say, consumer discretionary items for middle class consumer, the consumer is trading down. I think there's a lot of evidence of this in the United States. The consumer is either cutting back or trading down. Even Walmart, I think, said recently that they've had a record amount of affluent 6 and 7 figure customers that they've never had before. So, I mean, you're seeing that. You're seeing record amounts of bankruptcies for a lot of these consumer discretionary companies. Restaurants like middle class sit down restaurants, bricks and mortar retailers are closing locations like crazy. Meanwhile, Aaron, like you said, the S&P 500, Mag 7, just the funds chiefs just keep flowing to that, while a lot of these mainstream businesses are not doing as well.
Yeah, it's definitely, there's definitely that bifurcation there, and it's going to continue until the liquidity comes out. We may be starting to see a little bit of that really quickly, though, just on gold. Yields have been ripping us. So I just read the first time since never, right? The U.S. Treasury note 10-year yield has gone up 100 basis points since the Fed cut. And you have the dollar index at 3-year highs, and gold, what's gold doing? It's, 3-5% off all-time highs. Gold is holding up really well. So relative strength, you got to really like gold. I'm not saying it can't digest a little bit more here, but I'm actually pretty impressed with how gold is held up considering. And, we're kind of coming to seasonality here too. Quarter one's usually pretty good for the metals. Remains to be seen. It's not perfect, but definitely impressed with the price of gold here. And what's very interesting too is you've got that, the 2-year is coming down a little bit here. We did dip a little bit today, and the Fed funds is right on top of the 2-year. Like it's right there. If that 2-year yield goes up a little bit, we have to start talking about hikes. And it seems wild to say, but that's the reality. Now it is coming down. Maybe the Fed does see this downturn. Maybe the Fed is starting to see that, and that's why they're saying, hey, it's okay to cut a little bit. But yeah, definitely gold is interesting, and it's a different dynamic right now too, because like I said, we've never seen the 10-year do that after a cut. So I don't think that if we have a recession, it's not going to look like a traditional recession. It's going to look more like stagflation with that long end staying firm, maybe with the twos coming down.
Do you think it was a mistake for the Federal Reserve Bank to cut rates when they did? Because they've talked about, you've seen Danielle DiMartino Booth, who's a friend of the show. She's talked about that it was a catch-up trade where the Fed should have started cutting like a 25 basis points, maybe June or July. And in what they did, the 50 basis point cut. Do you think in hindsight that was a mistake for them to cut like that?
I think it's possible. Time will tell. It's very hard. I mean, we had, a lot of economists predicting recession for the last 2 or 3 years, and we're still we still haven't had it unless you count the one that we actually had that they said wasn't a recession, but that lasted two
Well, they're
quarters.
they're not even using
But
the CPI for the GDP numbers. I mean,
right.
they use a deflator for that. Look at the jobs report numbers, like how the revisions on the jobs reports. The majority of jobs that were supposedly created the last 12 to 18 months were federal government jobs or state and municipal government jobs, and then those numbers are revised down too.
Yeah. So it's yeah, we know that, but I could say it, it's certainly a possibility that maybe they are behind the ball. I can't remember who said it. I
Or do
apologize,
you
but
think then it was Janet Yellen? Because we know, like, I mean, there's articles on this, and there's been rumors here around Washington D.C. metro area that Janet Yellen was lobbying Jerome Powell and the other Federal Reserve voting board of governors members really hard for rate cuts because of U.S. Treasury funding issues with interest rates on the debt. So do you think that that was a major factor, or do you think that they cut rates for something else?
I think that definitely is a factor. I mean, when you're creating nearly $1 trillion in new debt every quarter, that's not a path that we can really, there's a math problem there at some point. But perhaps it is the Fed seeing something. We'll see, time will tell here. But regardless, my kind of camp has still been in the stagflation, and I think that you'll see that long end continue to stay firm. And maybe they should cut a little bit faster, but I think that long end will stay firm. And
Well,
the
hasn't
two,
the yield
2 years
curve is
coming
steepened,
down.
right? The yield curve is
Right.
steepened. So I
Yeah.
think one of the key things here, and I've been listening to some like mortgage experts. One of my best friends is a real estate agent, and here in the DC metro area, unless you can either pay down the mortgage with a 50% down payment or something like that. I mean, the average person, if you're putting less than 20% down on a mortgage, on a 30-year mortgage, Aaron, even with a perfect credit score, you're looking at like over 7% on a 30-year mortgage. I mean, the average person can't really afford those payments now because their salary is not increasing to what the monthly mortgage payments have increased. So, I mean, like that's gonna really hurt all types of the real estate market.
Right. And it's not the same 7% that it was in, 1987 or whatever. The debt to GDP is much higher now. Real household income is much lower. Wages are not keeping up with inflation. So when people try to say, oh, it was 7% before, it's not a big deal. Oh, it's definitely a big deal. It's not the same economy it was 40 years ago.
Yeah, it was also grocery shopping 40 years ago, Aaron. Grocery shopping, you'd probably get like a
Right.
good meal for like 20 bucks. I mean, now can you even get like a decent hamburger in a major city or metro area for under like 15 or 20 bucks? I mean, you're lucky to get halfway decent protein now that's healthy, that's not like mystery meat or something.
This is an anecdote. I'm glad you brought that up. I saw a video the other day, and it was a kid, and he was reviewing his Walmart purchase from 2022, I think. And he clicked reorder to see how much it would be. It was like $140. And he clicked reorder, and it would have been like 400 right now.
Whoa.
And
Yeah, and the
it's
CPI or changing
that's at
propaganda.
Walmart. Yeah.
Oh, I know. I order from Walmart and
Yeah.
Amazon, and I order like the some of the big box stuff. I have normal consumer goods. The portion
But they
size.
tell us that it's only 3%, right?
Oh, come on. I mean, like,
Yeah.
there's trolls that believe
Yeah.
that, but
Right.
like anyone who's doing any grocery shopping for themselves or their families, like even that there's tons of shrinkflation, Aaron, in like food, many different
Oh,
food
yeah.
items at restaurants or at the grocery store or at Target or Walmart or Costco, or Amazon. There's tons of shrinkflation too.
Yeah, there's no way you're ever going to get me to believe that it's 3%. And if the number was lower, like some people say, don't you think the government would be using that number?
I mean, they do use a deflator number for the GDP, so they want to show positive GDP growth. So they don't even use the average person doesn't know this. A lot of people on Wall Street don't like talking about this. They don't even use the CPI number for the GDP calculations that are released to juice so the algorithms move up the markets when the GDP number comes out.
Right.
Well, I want to ask you about like markets that you think potentially have some bottoms here. So the yield curve is steepening. What's contrarian right now? What do you think is cheap, hated, good value? What industries or sectors?
Energy. I'll give you some stats here. I actually wrote an article on this over the weekend, probably like a quick 5-minute read, but there's some nice charts in here. And our friend Josh Young shared this actually. Um, Asset manager net positioning in the energy sector, XLE, is negative for the first time since October 2020, dealers, meaning banks, commercials, are net long. If do you know what happened in October of 2020? The market bottomed and we ran, I think, 300% in the next 12 months.
Well, you had
So,
negative oil futures for a week or so, right? So that wasn't the
oh
real
no, this
price.
was after that. This was well
Oh,
after
really?
that. Yeah,
Oh,
this
okay.
was that. So we had that kind of like almost double bottom kind of look into October. It was a higher low technically. So this was after the pandemic crash.
Okay, so by net positioning, do you mean that like hedge fund managers? So those are specs,
Yes.
right? That means that
Yeah.
they're net short. That means that they're very, very short net oil. They're very, very short oil
Yeah.
futures contracts.
And on the other side, dealers like banks are getting long.
I mean, it makes sense if let me look up the West Texas Intermediate oil price here real quick. I mean, we're right at $70. If it goes a little bit lower, another $10, $15 a barrel lower, I mean, we're below break even price for those higher cost shale oil wells because like they have to keep I was reading an article on oilprice.com talking about depletion. I mean, those older wells, Aaron, the ones that were drilled 3 5 years
Right.
ago, those things are so depleted. I think like probably for one of the top Trump trades, and maybe I'll ask you about this for potential Trump trades, since we have a Republican-controlled Congress for at least the next couple of years, and then Trump in the White House. Which industries or sectors do you think? I think one of the top, along with energy, I think liquefied natural gas. I think natural gas in general. Um, Tied to electricity growth with these data centers, artificial intelligence. And then on top of that, I think Trump's going to want to export a lot of that liquefied natural gas. So I think the pipelines to get that natural gas from what the Permian Basin in Texas, Oklahoma, and New Mexico to like the Gulf Coast oil refiners and the liquefied natural gas export facilities in Texas and Louisiana, those things are probably going to get approved. Maybe Trump, even the Department of Energy, the new Department of Energy Secretary, I think he's talked about an across the board energy investment approach. So he said we need to invest in everything. So he said solar, yes, wind, yes, um, liquefied natural gas, yes, nuclear power, yes, oil, yes. So he's basically coal, yes, so clean coal, yes. So it sounds like we're going to be approving a lot of these liquefied natural gas export facilities, and maybe there'll be even discounted debt to build some of them, and then there'll also be pipeline approvals to there too.
I agree. And then we also just had so I guess it looks like the Ukraine-Russia gas transit is going to shut down after tomorrow too. So I know nat gas prices were up at like they're up like 20% at some point today. They did come in off the highs, but I believe new multi-year highs there just for the nat gas futures. So I mean, at least in the short term, there's catalysts there too.
Yes, and let me mention some company names. So, in the last like 6 to 8 months, you have Woodside Petroleum, which is Australia's largest oil and natural gas company. They bought Tellurian, which crashed because they couldn't use all debt to finance the liquefied natural gas export facility in Louisiana. They have the permits. They had started construction, but the cost, because the Federal Reserve Bank raised interest rates a lot the last couple of years at a record pace, the cost to build that liquefied natural gas export facility solely with debt tripled because the Fed raising interest rates. So you had Woodside Petroleum come in and buy the project, buy the company in the project because it already has the permits and the construction. So Woodside doesn't have to go through 10 years of regulatory process and all that extra capital. And so they've already bought the project and they're already securing like long-term offtake agreements with like one of Japan's largest electrical utility companies. The data centers in the US are going to need it as well, at least out of the Permian Basin. I think Elon Musk just also built that. And then the other one stock pick name I want to mention, you have a company going IPO soon. I don't know, did it go IPO yet, Aaron? Did you look it up? This is Venture Global LNG. So they're headquartered here in Northern Virginia, I think out of Arlington, Virginia, but their main asset is a liquefied natural gas export facility in Louisiana that has started to come online.
It
So
looks
that
like it's still
potentially,
a
that's like a
vehicle.
pure,
Yeah, I don't think it's quite online yet, public.
so that's a pure play for liquefied natural gas. That would be potentially like a call option then on Trump's energy policy over the next couple of years.
I have so if we want to talk Trump trade, so this would be a speculative, people are probably going to laugh at this, but this is a speculative play, and I'll make the case for it. Solar. And you mentioned that. So if we're talking about Trump trade, Elon Musk has been quoted recently saying, once you understand the Kardashev scale, it becomes utterly obvious that essentially all energy generation will be solar. We agree or disagree. He's a Trump guy. He's in Trump's, pocket. He likes solar. I think a lot of what's going on right now, and I'm looking at TAN, it's the ETF, it's at multi-year lows, right? It's just getting pounded. And just like XLE, which we talked about a minute ago, I think we're seeing a lot of tax loss selling. And we may be seeing some January effect. I think there's January effect to be seen in solar and traditional energy as well. Again, like you said,
It's
treat these like call options. They're solar companies. There's a lot of headwind. There's a lot of
It's a pretty
overhead.
good contrarian idea. Let me add to that, though, from a fundamental standpoint. If you're building these data centers, and the new ones are going to use 10 times the amount of electricity. I mean, Elon Musk, I don't know if the listeners have looked at any of the interviews talking about the Colossus data center that Elon Musk built. He changed, I've been listening to hours and hours of interviews and podcasts and expert discussions with like Silicon Valley technology investors and entrepreneurs over the last like 6 weeks, and trying to understand like artificial intelligence improvements, the data centers. This new Colossus data center that XAI and Elon Musk built, they built it in only 120 days. It uses, Aaron, 100,000 GPU units. The best engineers in the world that were like data center experts and artificial intelligence experts at like Google and OpenAI and Microsoft and some of the other companies that are Nvidia, some of the other companies, they thought that the max scaling for these data centers, Aaron, would only be about 30,000 GPU unit chips. And Elon Musk himself, supposedly he took a couple months to redesign this because he did the engineering himself and the blueprints. He came up with a new data center design, and they changed the new data center to 100,000. So he disproved all the best experts in the industry that said anything above 30,000 GPU units at a data center was impossible. He moved it up to 100,000 GPU units.
Wow.
That is an
Yeah.
enormous increase in energy
Right.
usage and chips. So he made Nvidia a ton of extra money because Nvidia now is going to be, instead of 30,000 chips per data center, Nvidia is going to be selling 100,000 GPUs per data center. And I've even seen some previews, excuse me, some estimates recently that are saying with some of the new data center designs, as Microsoft and Google, the engineers start to study what Elon Musk and XAI were able to accomplish at the Colossus data center in only 120 days. And by the way, at that data center, he negotiated contracts for like natural gas pipelines. He's putting in, I think, solar panels all around the data center. So it's an across the board approach. You have all these big tech companies that are negotiating what nuclear power deals. That's kind of the low hanging fruit at an existing nuclear power plant. But we need an across the board approach. We're going to need natural gas pipelines to these data centers. We're going to need solar panels. We're going to need all this stuff. It's all going to be the amount of electricity base case when we go to 100,000 GPU data centers and potentially 1 million GPU data centers. I've even seen that there's predictions now based on the new data center designs that Elon Musk has that people are saying it's even feasible to go up to 1 million GPU units data center by like 2028, 2029. I'm not sure if it'll happen, but that's the predictions now. But the base case now is 100,000. You're looking at like an order of magnitude step up increase in base case electricity usage.
Seems like a lot of red tape for the EPA to get themselves into also.
As an event, well, I don't want to talk about government energy policy and
I couldn't
the
help
the
it.
let's not talk about the
Yeah.
energy spending grift. I could go on for hours and hours
Yeah,
about
I
how
know we don't want to
corrupt.
derail this whole thing, right?
Well, as investors,
Yeah,
Aaron, I think one of the best
yeah,
long-term trends is going to be
yeah.
like investing in the infrastructure for these data centers going forward. Because unless like these things are blocked, and it doesn't look like they're going to be blocked, because the Democrats and the Republicans seem on board with this technology investment and infrastructure upgrades and the improvement in technology. Even the Department of Energy is building a data center test facility. I think here in Northern Virginia, they're planning on building that because they're going to be testing out the new data center technology, the GPU chips. These GPU racks, Aaron. These things are not like, okay, there are a couple GPUs like on your video game computer or your laptop. No, 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 no. These new ones, I saw the CEO of Nvidia. He couldn't bring out showing how heavy these and tall these racks are. Each one is 3,000 pounds. That just of chips, of the Blackwell chips, of the GPU chips. So each rack is 3,000 pounds. That's insane. That's a lot of materials. That's a lot of electricity.
Yeah.
And you have to cool these things down. So not only are you keeping these things powered up, the electricity, so they don't crash, you have to keep them cooled off.
Yep, absolutely.
Yeah.
Yeah,
So
these things are going to build themselves.
Well, my point, though, I think the point here as an investor is this might be the best long-term trend here is to invest in the infrastructure, the materials, the energy, the electricity for the data centers. I do not see this trend going away. I mean, like, there's people that are Luddites, anti-technology that want this blocked, but those people are a minority. It seems both political parties, the tech people, big tech, a lot of people in Washington D.C. metro area are on board with this. And unless that changes, I mean, this is going to be there's an arms race with all this stuff with the U.S. and China. And not only are they building the data centers for the software programs for artificial intelligence, this is also going to cause innovations in like quantum computing, improvements in diagnostic medicine, drug discovery. There's going to be improvements in video games and movies. There's going to be a lot of improvements with these extra investments into the artificial intelligence software in the data centers.
Yeah, well, that's been the new chase trade lately is those quantum computing stocks.
They don't even do any quantum computing. They just
Yeah.
put quantum in the name.
Well, yeah, they have quantum in the name. Yeah,
There was like they just changed their name. It was like the crypto stuff. It was like Kodak
yeah,
after they went bankrupt or something.
yeah.
Didn't Enron just change their name to crypto too? The
Oh, well, you remember in 2021 when every company was like saying, "Oh, we're gonna put Bitcoin on our balance sheet," you know?
Yep, yeah. Well,
Yeah.
you have what's a MicroStrategy that's putting, but they did an equity share
Oh
dilution
man.
too to go buy
Well,
Bitcoin.
that's
But
what
the
he does. He dilutes the shares to buy Bitcoin.
Well, but quantum computing's super expensive. I mean, like you're talking like the only ones that can actually afford some of the stuff are Microsoft and Google right now, and governments, so military. This is and like Palantir, very very expensive to
Yeah.
do stuff like this. So like any little company that says we're doing it, I think it's just marketing for the most part, unless they have kind of like a funding or a contract deal with one of the larger tech companies or like the Pentagon or Department of Defense or a military industrial
Some
complex
sort
company.
of
Yeah,
niche.
well,
Yeah.
they have to have someone else paying the bills because the little company ain't going to be able to afford that. But
Right.
back to your solar panel point, Aaron. I mean, like for these data centers, like during the day, you put solar panels on those things, right? And that'll cut your
Yeah.
electricity bill down. So during the day, you can put solar panels all around the data center or on top of it, and that'll cut down how much natural gas or nuclear power you use. So you can have an across the board approach. I think there's some merit there.
And well, and the government will pay you to do it too, because you get a tax break for that.
Are there any other contrarian ideas you have or Trump trades you think that the market is not understanding properly right now?
Right now, contrary, I don't know if I have the greatest contrarian trade. I still think I had a kind of a contrarian trade earlier in the summer, and that was I said basically sell chips and buy cloud, and that did work out. I still think cloud can do very well, software, cybersecurity, anything software related. I wouldn't be a buyer here. I think it needs to cool down, but I still like that sector moving forward. You know, and people forget that like the chip thing is there's like this race for chips, but software is right there with AI. I mean, it's the next thing.
Well,
So
cloud computing is also data centers. So I mean, like
yes,
basically, if you're
exactly.
investing in data centers, like Amazon here in Northern Virginia, Amazon's buying up land. The average listener doesn't pay attention to the local Northern Virginia business journals like me because I read this stuff now. This is how crazy it is the last couple of years. Amazon, Microsoft, Meta or Facebook, Google, they're paying over $100 million for land packages all over Northern Virginia. They just paid, I think Amazon just paid another 200 million for even more stuff here in the DC metro area. So Amazon has paid billions of dollars just for land, and it's solely so they can get the land in place first, get the permits, and then start to build more, even more data centers. Amazon has actually announced that they're going to build university-sized campuses for data centers, and that's for artificial intelligence and cloud computing.
I think they I didn't Trump because they were going to build one in Mexico, and he was like, "No, you build it here." I
They
can't remember
just approved one in Florida too. They're one of them. I can't remember the company name. I just saw that they're going to build one so massive in Florida, similar to the Colossus one, that it can handle all the data for Facebook and Meta and Instagram. That's how large it's going to be. So I mean, we're talking about like insane amounts of data centers. You have the ones around the nuclear power plant that just got finished in the Atlanta, Georgia area. So there's data centers going up around there. There's a scramble, but the main one here is in Northern Virginia. That's like the data center hub. There's already the most amount of them, and they're building even more. There's like insane amounts of plans to build them in Loudoun County and elsewhere.
yeah, I got to be like Langley, right?
Well, military industrial complex is just part of it. The tech companies are buying up land. The tech companies over the last 3 to 5 years, they've started moving more of their corporate headquarters here. Google bought an entire building out around the Reston Town Center right next to one of the metro stops. So they just
Oh, so
decided
they're
that,
they're right closer to right where they need to be anyway,
well, I mean, like when
right? They got,
well, these companies are moving. Let's just put it this way: these companies are moving from a higher tax state like California or the state of Washington, like in the Seattle area with Microsoft or Amazon. They're moving to a lower tax because Virginia is number one or number two pro business every year, even though the like property taxes are high in like the counties surrounding Washington D.C. and Northern Virginia, but Virginia is still pro business.
yeah. Well, anything's more pro-business in California, so
Yeah, that's true.
except
Well,
maybe like Oregon.
or Illinois. I mean, the state of
Yeah.
Illinois, New York, New Jersey are pretty bad. So, so we didn't talk a lot about specific energy companies. Let's talk about ExxonMobil. I mean, ExxonMobil sentiment wise, share price wise, isn't it close to the 2020 pandemic levels?
Sentiment probably. Share wise, no, we're way off that. So believe it or not, Exxon's really not that far off of really. It's kind of like all-time high range. I mean, like it's never really been able to break through 120 with any follow through. It's at 105 right now. I like the stock. I own it. It's been in a range for probably about 2 years, and I think to me as a chartist, I just see it as basing. And I think that if you get some of this money to come out of tech, which I think will happen um, early next year, and when I say that, I mean like as in you see some like the QQQ is up 110% in 2 years. We're going to have some sort of correction there. Where does that money usually go? Usually goes in energy. And so I think Exxon is set to, I think it's set to have a trend like, to new all-time highs. But yeah, it's been very weak lately. XLE's been weak. One of the stocks that a lot of members in my group like is DVN, Devon Energy. I like Devon Energy a lot down here, and I just think that there's a lot of discounts here in the energy space. And everybody wants a dip to buy, and then when the dip comes, everybody hates it, and then they don't want to touch it. I think you got to be aggressive here.
And Devon's more of a natural gas play. So they're more of a natural gas producer. They did do some acquisitions for oil, adding oil production over the last couple of years. So they're closer to a 50-50 mix of oil and natural gas, but they used to be, excuse me, overwhelming majority natural gas. In terms of other companies, I mean Warren Buffett. Let's talk about Warren Buffett's capital allocation because I think it's interesting. So what Buffett's been selling Apple, what he missed kind of the move the last couple months on Apple because he was selling a lot of his shares of Apple, but he's been panicking about the bank stocks, right? So he's been offloading over the last couple years. He sold a lot his Wells Fargo. He unloaded a couple years ago. He sold his U.S. Bancorp, which was the commercial real estate play and small business loans. He got rid of those shares as well, and he had held those for many years. And then recently, he's been offloading his Bank of America stock. But his capital allocation, though, Buffett's not buying that much right now, other than Occidental Petroleum.
He's in a lot of cash, and I don't know. OXY Oxy it's been in a range for a while. It hasn't really done a whole lot. But he likes it. I don't know if he wants to take it private or something, but yeah, he sure buys a lot of it. And yeah, cash wise, he's in a lot of cash right now.
Yeah, I think he bought some small cap companies. I think he bought Ulta Beauty, the cosmetics company. That's a very popular among younger adult women and teenage girls. So that one's really high quality products, and they have a good rewards program. So that one, he's been buying that one. I guess he like figures that cosmetics are recession proof.
It's a funny one. I had I had a Lululemon earlier this year, and I was underwater on it for a while and round tripped, and they had a nice pop with Ulta after their earnings. So yeah, there's another one that's kind of a designer brand there. But yeah, I mean, I guess. Um, but some of these brands have, they've come back a little bit. One of the kind of off topic here, but one of the stocks I've liked all year has been Netflix, and that's just off all-time highs right now. I don't know if I'd be a buyer up here, but there are some companies that can produce growth even if we do have slowdowns. If you can create value, like my case with Netflix was I don't think investors realize how big the NFL going live and WWE going live, which will be at the beginning of the year. There's a lot of value that you can create if you know what you're doing, even in tougher times. I mean, like you said, like we see that Buffett's buying Alta, even as Walmart's making fake Birkenstocks.
Oh yeah, well they just sold their Birkin bags. They
Yeah, the
came
Birkin
up with a
bag.
really good knockoff Birkin bag, which is over $20,000 retail.
Yeah.
Retail for a new one, I think a used one's still around 15, $20,000. And Walmart just sold a almost exact copy knockoff for $78, and it sold out in under a week. There was like a fight over them.
Yeah.
But there's like other, global recession or depression red flags. I mean, one of the big ones, the luxury goods company, I think in France, with the largest one in the world, that owns like Louis Vuitton and some of the other major luxury goods items. They just announced that they're having to discount too. So they're announcing that they're reluctantly doing discounts. So that the global economy, people's purchasing power, their discretionary income is falling dramatically when the consumer's trading down. The more affluent consumers trading down to Walmart. People are not going out to eat as much, and then the luxury goods companies are starting to discount too.
A lot of I read home builders are now slashing prices as well.
But the home builders always come up with like tricks. They buy
They
back
always
points
come
on
up. Yeah,
mortgages.
you can't stay short them
Yeah,
for
yeah,
long because they
you can't
will.
short the home builders.
Yeah,
The Congress will give them a bailout, man. Like
yeah,
they'll one of the people in Congress on that like subcommittee, they'll get like some kind of discounted condo or like I think what was the guy's name? Christopher Dodd. Was that the one from Connecticut or Delaware? I think it was Connecticut. It found out what he was getting like a almost 0% jumbo mortgage on his like mansion or something. Yeah, so like he was in bed with which one was Angelo Mazzillo? That Countrywide? Yeah, so like that was like prior to the 2008 financial crisis. Like some of those guys were getting like literally like almost 0% mortgages on their mansion on jumbo
yeah,
mortgages. Yeah, so I mean like those are one of the perks of being like a corrupt congressman.
yeah.
Along
Well,
with this along with the $17 million slush fund. Did you see that news story that apparently Thomas Massey and they're trying to get rid of? There's like a $17 million slush fund that Congress has for like paying off like for sexual harassment or rape or like or getting them to sign non-disclosure agreements or like an illegitimate child for child support.
oh, okay. Yeah, so it's like yeah, it's basically just like a like an HSA for nefarious
It's a
activity.
hush money slush fund.
Yeah,
So you fool around with like one of your congressional aides or you get one of your interns or something like that pregnant and you pay her like a 6 or 7 figure payout for a non-disclosure agreement.
yeah. But if a CEO does it, it's a big scandal.
Maybe.
Yeah.
Maybe. I mean that's just business. That's a Monday or Tuesday here in the Washington D.C. metro area. That stuff's happening like there's like honeypot scandals all the time.
Well, what
Okay,
was it
so
today? They just that story came out about the China like hacked the Treasury Department or something.
I mean, like, that's just a Monday or Tuesday here. They've stolen so
Yeah,
much of our military intellectual property. So, I mean, like, is anyone surprised at this point? Like, literally, there's government employees. Like, how many stories, Aaron, you've been doing this a long time. Remember when the Securities and Exchange Commission, there was like a secret report that caught like a lot of them watching porn on their computer and how shocked everyone was like 10 years ago? I mean, like, that's no big deal.
yeah,
That happens all the time here.
yeah. Oh yeah, we remember.
Well, I mean, like the Freedom of Information Act. Like, I'm going off tangent here because it will provide some interesting, funny stories here. Look through some of the disclosures in the Freedom of Information Act between Lisa Page and Peter Strzok. They were during work hours. They were using like resources, government employee resources, taxpayer funds, on their phone and their computer. They were booking hotel rooms at fancy hotel suites to go cheat on their husband and go have sex. And so, like, they were using like funds for all this and sneaking out of work to go do that. Then they go and sue the government, even though they were using, employee resources for the emails and the text messages and taxpayer funds to sneak off and go cheat on their spouses. And then they turned around and sued for what defamation and other stuff. And I think they each got over $1 million settlement.
Wow.
Yeah,
Yeah.
and so this is why I'm really hoping that the Department of Government Efficiency will fix things, but the average person is not talking about any of this, and this stuff goes on all the time here. It's just sad.
Yeah. Waste, fraud, and corruption.
Hey, I mean, if the taxpayer is going to fund all this stuff, the government employees are going to get away with it. No
Well,
one's going to
like I said,
prison. They each made okay. They got publicly embarrassed, right? But and I think both of them are divorced, but they're each getting like over $1 million settlement or something like that
well, when we create a trillion dollars in new debt, that money's got to go somewhere. You got to spend it somehow.
on hookers and booze. The
Yeah.
Hunter Biden stimulus plan
Yeah.
on hookers, cocaine, and booze.
Yeah.
Oh boy. Well, let's talk about gold stocks. So we're a little above 2,600 gold. There's a huge divergence. We've seen the charts going around on financial Twitter or financial X. There's a huge, multiple standard deviation divergence, Aaron, between the gold price and gold stocks. Do you think that they're going to play catch up, or do you think that this is one of the cheapest, hated, most unloved sectors out there?
I would like to think they're playing catch up, or they will play catch up. I do still like the sector, and I guess if you're looking for contrarian, that is a place to look. Again, as the price of gold's really not pushing down, but it's almost as if the market, right? I mean, GDX is just for instance is still like not even close to its all-time high back in 2011, whereas gold has been making new all-time highs for a while. I would, I mean, my best explanation for that is just that rates are so much higher and the cost of capital and the cost of doing business is so much higher. And that's really the only thing I can come up with here because I thought that by far, I thought that they would lag for a while, but I thought they would catch up once we started confirming new all-time highs on gold, and we've done that for a long time. But I do think there's some value here. I don't
I,
really see anything wrong with the charts. I mean, we're kind of just back testing what 33, 34 on GDX. It looks okay, but
Let me add some points here. So I think the Asian retail investor, which is, I would argue, the last 12, 14 months, is the new marginal demand increase for physical gold and silver. So, like out of China, India, Japan, Korea, Thailand, Vietnam, there's been a huge increase in retail investment demand for physical gold and silver. They are not buying any gold miners. Okay, so I think
right.
that's one of the points here. They want metal. They do not want GLD. They do not want GDX. They do not. They don't even want Agnico Eagle. Agnico Eagle, I think, is a bargain here. I think it's like they own the two best producing gold mines right now on the planet in Canadian Malartic and Detour Lake. They took advantage of that discrepancy that you just said with the gold stock prices. They went and bought a junior miner with all the land next to one of their producing mines, and they got the assets for pennies on the dollar. So there are smart companies doing things, setting themselves up long term. So even though the stock price, the valuation is not great, the management teams are making really smart moves long term. There are some of those companies out there.
Yeah, there certainly is. And Agnico Eagle is certainly one of them. And share price wise, that is holding up the best that I can see just off the top of my head in that space. That's a pure miner.
Well, their costs haven't kept creeping up. I mean, like one of the issues, the largest market caps for gold miner, Aaron, I think are what Newmont Mining and Barrick Gold. I mean, it just seems
Yeah.
like almost every three or 4 months, every quarter almost, the costs keep going up 30, $50, sometimes more than that. And it's like, what is going on with these companies? Can't
Or
they
they're
figure it?
hedging wrong and they hedged wrong and then took a huge loss on futures or something.
Yeah, I mean, we've had relatively low oil prices. So you'd think that at 26, $2,700 gold, that with relatively low energy prices compared to the past, these companies would have good margins, and yet the costs keep rising. I think the issue is labor costs and in the ore grades. So they're just mining lower and lower grade ore, and they can't cut their costs. I think that's the issue.
Right. I mean, you look at, so we talked about GDX or Barrick. If you look at Agnico Eagle, it's essentially at the 2011 or 2010 highs. If you look at it's not a minor, but like a WPM, that made new all-time highs recently. Barrick is trading at the same level it was in 2000, and I'm not making that up. I mean, it's $15 a share. I mean, that's where it was in 2003.
Okay, by WPM you mean Wheaton Precious Metals. That's a royalty and
Yeah.
streaming company. So
Yes.
their
Yeah.
profit margins with the free cash flow are way better than say Newmont Mining or Barrick Gold, which have
Yes.
enormous issues with maintaining costs, ore grades, their labor costs, their energy costs. If you own, say, a Franco Nevada, Royal Gold, Wheaton Precious Metals, you don't have to worry about those input cost increases.
Right. And a lot of those are at all-time highs or close to all-time highs that in that space.
Yeah, other than Sandstorm Gold, but I'm actually cautiously optimistic. They just had the Greenstone Gold Stream, which is one of the lowest cost mines in Canada that just came online, commercial production back in November. So, and they have, I think, half a dozen really good mines that are under construction right now. I think even Hot Modern started construction substantially in the last couple months. So there was like Newmont actually. I wanted to talk about this. Like Newmont Mining, they're so big, right? They're pulling, along with Barrick Gold, 5 million ounces a year of gold and a ton of copper out of the ground. That like a project that they don't care about. They just sold a couple producing mines at, I would say, huge discounts. They sold the Eleanor mine in Quebec for around $900 million, give or take. And I think it was to, I don't think it's on a publicly traded company. It's like a London company. So they got that mine. That mine could be fixed up. That mine could be turned into a winner long term. And then they just sold to SSR Mining, which needed another producing mine. They sold 170,000 ounce per year producing copper and gold mine with pretty decent reserves on it, Cripple Creek in Colorado. They sold it for $100 million. So SSR Mining got 170,000 ounce per year producing gold mine for $100 million. Now there's a little extra. I think there's an extra royalty payments along the way in the future, but like 170,000 ounces of gold, Aaron, at the current gold price, that's a substantial amount of free cash flow. And Newmont Mining, like because it's a small mine for them, they just almost gave it away.
Yeah.
So
It's,
I think like SSR Mining, like they got like a gift there. They got like that mine on a, if you run the valuation and the cash flow numbers, that mine's not worth $100 million with a little bit extra a couple years from now.
yeah, it's pretty amazing how poorly that I mean, what are we at 2,200 an ounce and we're still not
You got 2,600.
still
You mean,
or 2,600, yeah, sorry, 2,600 an ounce and we're still not having lower costs here, still not running the business properly.
well, I mean, Newmont said that they were going to sell these mines like 12 months ago, and this is the best deal that they could get. I mean, they a good deal, I think, for SSR Mining because they added diversification and they added like 170,000. They're a mid-tier gold miner. They added 170,000 ounces per year of safe gold production in Colorado. So even they're kind of insulated now from the issues in Turkey with the Chopler mine. So they have extra free cash flow now. They didn't have to pay a lot up front. Sounds like a good deal for them. But Newmont, like, why couldn't they get a better deal?
Well, if they're not running the company right.
Well, they also hired like they just fired, I think, like a bunch of DEI middle management employees that they were paying six-figure salaries to. So maybe they're gonna
Well,
turn
maybe
things
that'll
around.
help.
Huh?
Yeah.
Did you see that there's a new ETF? There's an anti-woke ETF now. I just saw them advertising it now because of like the Republican controlled Congress and Trump in the White House. They're marketing now an anti-woke exchange traded fund of companies.
Yeah, I do remember hearing something about that. I don't remember the ticker. I do remember something of that nature though.
So I want to ask you then about commodities. Do you think we're going to see overall weakness in commodities until maybe China announces a stimulus program or quantitative easing? Or do you think that we're going to see a bottom sometime in early to mid 2025 with a lot of these other commodities like energy and base metals?
It's a really tough one. China has been kind of wishy-washy. They said that they were they kind of talked a little bit of talk here. I still think the Shanghai looks okay. To me, I actually do kind of like the Chinese stock market here still. But for commodities, yeah, they didn't really like bid off of that last stimulus talk. I mean, we got like a small bid in palladium, platinum, but they've kind of given those gains back. Copper hasn't really done a ton. Wheat here, not really the greatest. It's kind of at 52-week lows. It's going to be interesting. It's going to come down to yields too. I think if we do get that slowdown and like the 2 year does continue down, that could be a little bit of a headwind here. I still like oil prices. I still like energy, but it's going to be interesting to see how this shakes out here with the tens. I mean, think about it right now. The 10-year yield um, did come down a little bit today, but two trading days ago it was at 4.6 and a half. That's not far from 5%. So it'll be interesting to see how the twos work out. But I'm not really seeing anything great for copper right now. I think that might need to go down and test 390. It's a little bit above four right now. I want to get back into some of the alternate precious metals like platinum and palladium. I just don't have a setup for them right now. But I do think that the risk to the downside here is very low. I just don't see them going much lower. I just don't know if they're ready to have a real breakout yet.
And I think the fertilizer company stocks like Mosaic and some of the others, aren't they near 52-week lows? So they're really weak right now too.
Yeah, Mosaic too. I did catch the bottom in September in that for a swing. I did not hold it for very long, and it has now made new lows. But yeah, these things have just been getting hammered, and even like NTR, which has performed a little bit better. That's still right at the multi-year lows right now. So these fertilizer companies have been getting hit as well.
That's interesting considering food prices are still, I think, relatively high, and there's been some crop failures in a lot of different areas of the country. There's still issues with Ukraine, and Ukraine has a enormous. The Europe is reliant on a lot of the Ukrainian wheat production, so there's still issues there, and they're not going to be delivering as much wheat. Where do you think that extra wheat is going to come from? Is it going to come from Brazil or the U.S. then?
Yeah, it's possible. I guess maybe there's a Trump trade if he wants to try and get involved in that. But yeah, I mean, it's at like 540, 540 a bushel or unit, however they classify it. But that's kind of really been I guess it's been in a range for about a year, but it's just kind of hovering at multi-year lows. Um, wheat tends to spike too. It's one of those commodities that it doesn't do anything for a while, then it has a big run. But it's made it a little attractive here at 540. But yeah, it just hasn't been able to get anything going, and that's with war talks, and wheat is a war commodity too. And we've got these war talks heating up, and it still hasn't been able to really get much going.
So I want to ask you about a prediction that you were talking about in your videos over the last 6 weeks. You've been talking about that gold is building a base, it's going sideways, a little bit of correction, relative strength, as you said, against the dollar. What do we need to see for gold prices to get to $3,000 an ounce or higher in the next 12 to 18 months, in your opinion?
I think it's possible it could happen in quarter one. Um, we're not really that far away. So think about it like this. It took us, what, almost 15 years to go from 1800 to 2000. We've gone from 2000 to 28 in less than a year. So we're still technically like on breakout. Like that's one way of saying it. I think, we get I don't know, a few more weeks of consolidation. I can see us breaking out again. I don't think it's going to take that much. If we look at April, when we topped out on the 12th, we started to break out in August. So you got, what, 4.5, 5 months, and we've been topped out now since October. Yeah, it's not that far off. We're already on 2 months now. Yeah, so I could see it in quarter one, or maybe late quarter one, early quarter two. It's really not that far out of the question when you consider where we've traveled. And this is, gold has put in a base for 15 years, right? And it's on breakout now. So I don't think it's just going to stop after one leg up. So I think, a few more weeks, maybe a month, more consolidation, it starts to really get attractive here.
And I think a key thing here is with the G7 versus the non G7, because even though a lot of these European countries and our G7 trading partners, their economies are not doing well. So, like Canada, France, England, the United Kingdom, some of those other countries in the G7, their economies are not doing well. You could look at a lot of the data, and yet they've been buying U.S. Treasuries. I'm wondering where they're getting the funds to buy the U.S. Treasuries. But the outside the G7, Aaron, I mean, they're accumulating physical gold. They're looking gold tonnage over the last, especially since the Russia sanctions in early 2022. The amount of monthly gold tonnage purchases, this is dollar cost averaging for investors out there, but central banks are doing it. The amount of monthly gold purchases has about doubled since the Russia sanctions. So the amount of monthly gold purchases has about doubled each month compared to prior to the Russia sanctions. So I think that trend is not going away, even though Trump has threatened them. I want your opinion, though, on Bitcoin here. Do you think that this is related to what Trump has said with a strategic Bitcoin reserve or stockpiling Bitcoin, or do you think Bitcoin is rallying for other reasons?
Oh man, that's I think Bitcoin rallies whenever they print new tether, but yeah, I mean there's certainly some of that there. There's a lot of hype. They've been talking about they've been asking Jerome Powell about the Bitcoin and in FOMC press conferences, and it's hilarious to see him respond because he can't say anything. But right now Bitcoin, yeah, they put in a high a few weeks ago. It's backing off. I don't really see any issues with it right now. Could it be a top? It could be, but we're not really rejecting too hard. It's just kind of going sideways. And the longer it does that, the more it could just consolidate and go higher. So I think Bitcoin, I don't think this particular leg is going to be that much higher, but I think I could see 115, 120. But yeah, I mean, it's such a tough question to ask. Like, why is Bitcoin rallying? Well, what are the fundamentals? What's the earnings? What's the CEO? It's
I,
very tough
I
to,
would say it's
but
mostly liquidity flows from those other central banks too. So like
right.
if there's currency weakness, say in Japan or Korea or emerging markets, I mean that creates Bitcoin demand. So in some of these other countries like Venezuela or Turkey, it's just easier to buy crypto in certain instances if you're doing mobile payments on your phone and then necessarily go out and buy a lot of physical gold or silver.
Right. And you can't, and if you're in a really oppressed country, you get audited, you can't carry around 100 gold bars with you. You can't walk into an airport with a bunch of gold, or cash.
Well, I think there's a lot of employees at the Treasury Department and the regulatory agencies, also the Federal Reserve Bank. There was a screenshot going around. Someone in the Bitcoin crypto community that's in New York City is friends with a lower level employee at the New York Federal Reserve Bank, and they took a screenshot of one of their girlfriends because it was a pretty girl. I think her name's Aubrey Strobel at a New York City area. Like she's friends with a lower level employee at the New York Federal Reserve Bank, and they were trading crypto on their phone. So I mean, like there are government employees. And I brought this up, Aaron, in the past because you've cited me on financial Twitter about this too. That like here at the DC Blockchain Summit, you have tons of government employees at the Securities and Exchange Commission, the CFTC, Treasury Department, even Federal Reserve Bank employees are down there on the down low. They might not have a name tag saying I'm so and so from the Federal Reserve Bank or the U.S. Mint, but they're there at the conference and they've been there for years, and they admit that some of them do, at least like the former head of the Securities and Exchange Commission and other people in the Treasury Department, they've said that they own Bitcoin. They said their family and friends own Bitcoin, that they're pro Bitcoin. So they don't want to kill it.
No, no, not at all. And it's not, well, not that it matters, but it's not a stock, so it's not insider, not that it matters because they just do that anyway. But
Well, especially if Bitcoin price. Have you seen the Luke Gromen like theory that if the Bitcoin price goes up, then there's more demand when people trade it, right, for Tether or stablecoin because you don't go to all cash in your crypto trading account, so it goes to stablecoin or Tether when you're trading a lot of crypto at a crypto exchange, and then that creates more demand for treasuries.
yeah, that's possible.
I don't know. It's an interesting theory. I'll try to get Luke Gromen on for an interview to talk about
Yeah.
it. It's a very interesting theory.
It sounds kind of like what Sailor's doing, like it's just this infinite money glitch.
Well, I mean, they need to find demand for the U.S. Treasury somewhere, right?
Yeah,
Because
it's just
China and
create
Japan are
tether.
not
Yeah.
buyers, huh?
Yeah, just create a bunch of tether.
Well, if the non G7 are not going to be buyers of treasuries, and China and Japan are net sellers, they're going to have to find buyers elsewhere. I mean, I guess maybe the Fed could just stuff the stuff off balance sheet in a special purpose vehicle, or they could change the accounting law so the commercial banks, so the larger banks and regional banks here in the United States can buy more treasuries and not mark to market the losses.
Yeah, I guess.
They can put them all. They can just put all the bad treasuries in a hold to maturity account and just not mark them down.
Right. Yeah, there you go.
Well, I think Aaron, I think key point here with the yield curve and stuff, the banks with the real estate exposure, there's not mortgage demand for residential real estate. So you're not going to see young home buyers. There's not going to be as many people wanting to buy homes unless they're getting financial help from family and friends to go and pay down the mortgage or pay all cash for a home. You're not going to see the average person be able to take a mortgage at these interest rates without financial help from someone else or a new type of government, what subsidy or stimulus program for something like that. But then I think the other issue with the yield curve that you talked about, I think commercial real estate is looking much worse because, normally with the Federal Reserve Bank rate cuts, that would help commercial real estate with refinancing, and that's not happening.
Right. And we'll see. Banks they've done okay so far. I know it's funny, but Druckenmiller had some regional banks last quarter. I don't know if he sold yet, but we'll see how long they can weather that storm. I think the Fed's already doing something underneath the surface, but we probably won't know about that.
I want to ask you risk on versus risk off. Are you surprised about like the gambling mentality? Because I'm just seeing on TV these commercials for sports betting. What did these meme coins or altcoins? You have just people betting like insane amounts of money on the Hawktwa meme coin, which lost people a lot of money well, made Jake Paul tons of money, but lost everyone else their shirt in 48 hours. And now what the new one is fart coin or something?
Yeah, and that has a better store of value than the S&P does lately because even when the S&P sells off, that still goes up. So
Well, the market cap, I saw an interesting chart. The market cap on some of these meme coins or
yeah,
altcoins
it's higher than like 40% of S&P companies.
and all the gold mining stocks apparently too.
Yeah, like put together.
Oh boy. Yeah, it's just I see the social media posts and I'm seeing like people saying like, how dare you say that the odds of these meme coins are worse than gambling at a casino? And it's like, okay, well, people talk about their winners, but I mean, like these meme coins, right? Some of them are crashing, aren't that? Some of them, some people are losing like 90% of their money in a
Well,
short
right, because
amount.
they don't have discipline enough to like scale out on the way up. And I mean, it's bubble mentality. So, if something does go up 400 or 500%, it's going to crash just as hard. And if you don't know how to scale out and protect yourself on the way down, then you're going to give it all back.
So for 2025, you expect then the stagflation narrative, and you think that in terms of like sectors and value, you think energy is potentially bottoming in the next couple quarters, and that the gold stocks, as long as the gold price doesn't crash, the gold stocks are potentially good value too.
Yeah, I would agree with that. I would say also tech maybe due for some corrective move. I'm not bearish, but I think it's due for some sort of giving some back.
And I think
I'll
we're going
tell
to
you
see.
this right now. I'll let you viewers let this have this nugget of information. So let me tell you a story. My mom sent me a text message last night. She never asked me about stocks ever. And she asked me, Aaron, should I buy Nvidia? And I said, okay. I just said, thank you for telling me that because it just gave me a very good, bellwether here. It's kind of like the, when the electricians, asking you about pets.com.
Or the
Uh,
shoeshine boys giving you
right,
stock tips,
exactly,
right, from the
exactly.
from the bucket
Yeah.
shops from the
I said, Mom,
1920s.
no, you already have it in the index fund that I had you buy 2 years ago. Just it's not a good time to buy. Just
Well,
thank you so much for telling me that though, because you may have just given me a ton of value just by saying that. But
Well, the CEO of Nvidia just did a 15-minute give or take interview on 60 Minutes. So, I mean, like I've been watching
yeah,
his presentations at technology conferences. Like there's a really good for our listeners out there you want to learn about like some of the future of data centers, artificial intelligence, quantum computing. He gave a 90-minute presentation in the last 6 weeks at a technology conference in Japan explaining some of their plans and how like Nvidia was using the profits right from making like the GPU chips for video games and crypto mining to take those profits and reinvest them because he was predicting 15, 20, 30 years ago that eventually all these GPUs in a neural network would eventually surpass the computing power for CPUs with Moore's law.
yeah. I mean, they're definitely going to do amazing things. It's just the fact
Well,
that at
I
some
think
point,
there's going to be more competition. So I think right
well,
now the
and
market
you
thinks
reach a
that it,
critical mass at some point. I mean, eventually there's just a critical mass of buyers, and you just have to. It's just a natural ebb and flow of the market.
well, also the thing about capitalism is that when a company has, that much market share, that much profits, it attracts competition. So there will be competition eventually. I don't know which other company is going to compete with Nvidia quite yet, but they're not going
Broadcom,
to have.
Broadcom, definitely, and AMD. Here's a contrarian play for you in the tech space. AMD, everyone hates it. It's at 52-week lows. They make chips. They're good. They make money. Um, if you're looking for a chip stock, I'd rather buy that than Nvidia right now.
Are they making CPUs only for like laptops and desktops, or are they actually making GPUs? Because like
They do a lot of things.
okay, because for the computing power increases that have been happening recently with the artificial intelligence learning language models, the computing power gains that they're making with the data centers are not coming from the CPUs. They're coming from the GPU chips. So that's where the advancements are coming. So for our listeners out there, I would look for competitors to Nvidia that are making GPU chips. Although I think what'll happen is anyone who has like a better chip, a better GPU, innovation in the lab than Nvidia, I think Nvidia is going to start buying them. They've been doing that
Yes.
to a smaller extent. Excuse me. They've been doing that to a smaller extent the last like 5 or 6 years. I think Nvidia is not with a higher stock price. They're going to go and buy any potential competitors before one of the larger tech companies or one of the ones that you mentioned, like Broadcom or AMD, goes and buys like a rival small company that has like a way better GPU chip in the lab. I think Nvidia is going to try to buy them out to protect their market share.
I think that will definitely be a thing too. And if you're savvy, maybe catch some of those companies.
Yeah, you'd have to do individual research work on some of that, or look at some of the charts, like what you're looking at. If maybe there's some options activity hidden
Yeah.
in some of those small cap stocks, because sometimes with the insiders, they tip their hand because the insiders are exercising their stock options, where there's mass amounts of insider buying. You see that with acquisitions. I think a major theme for
Yes.
2025, Aaron, I think there's going to be a lot of acquisitions. We've already seen this in the oil and natural gas space. The last couple of years, there's been almost $250 billion of oil and natural gas acquisitions the last couple of years. I think that will continue, especially for liquefied natural gas. I would not be shocked to see like the Saudis build like a liquefied natural gas, invest in one in a plant in Texas or Louisiana. I wouldn't be shocked to see something
Yeah, they
like that.
could.
Hmm?
Yeah, they could if they wanted to.
Well, I mean, we have cheap natural gas here, and there's enormous profits once the liquefied natural gas export facility is built. Look at Cheniere's just minting money, and people are
Yep.
going to want, these other countries are going to want diversified alternatives to liquefied natural gas away from Russia or Ukraine.
Yeah, that seems to be what everybody's wanting to do now. So I know that I guess we'll see if this deal does actually run out. I think it will. I think the EU wants to appease Trump a little bit here. So
Well, I mean, like the other thing for data centers and for power in general is nuclear power, but like getting a nuclear power plant approved in the United States and Europe, very, very difficult. They can't build them at the pace that China and India are building them.
right.
Yeah, so I am bullish long term on nuclear power. You've talked about this in your This Week in Charts videos. It seems like what Cameco and some of the others are kind of like consolidating right now. There's a correction and consolidation phase. They're kind of boring. They've already had a huge move up and now it's digesting.
Yeah, that's exactly it. And they're still hanging in there fine, but it's just that's how things work. But I mean, Cameco, it digested for like 2 years, and then that led to a huge breakout. So this is kind of it's what you have to get through as an investor.
And the key here is the big technology companies. So like all the 5 or 6 tech companies that are what making like internet search and software. So Microsoft, Google, Meta, Amazon, and then you have what OpenAI, which just switched to for profit not long ago, and now you have Elon Musk's company XAI, which is leapfrogged. I would say a lot of them because they came up with that innovation in the data centers. Now you have all these other tech companies, including OpenAI and all the other their engineers that are scrambling to try to copy the data center designs that XAI and Elon Musk made with the 100,000 GPU chips each one. And we could even be scaling up faster than that by late, 2028, 2029, and 2030, according to some of the projections I've seen. So if
Yeah,
they
see
do
that.
spend the money, the key is the capital expenditure, right? I would argue that people need to pay attention. Are they actually spending the capital expenditure on that, or are they cutting back?
Right, exactly.
Because if they're spending it, I mean, someone's going to benefit enormously. It's either going to be like the electrical utility companies, the natural gas pipeline companies. Someone's going to make a lot of money with those tech companies spending like that.
Yeah, I mean, like I said earlier, that those things are going to build themselves. So,
And I think solar, solar is cheap and hated right now. So maybe like they announced that they're going to put solar panels all around the data center. So you put in natural gas pipelines, put solar panels. If you can't get a nuclear power plant built around the data center, so I'm not an across the board approach for energy investing. If things play out the way I think they do by 2034, 2035, we're going to need a lot more energy and electricity. It's not even funny. We might need an order of magnitude more.
right. Yeah, and with these solar plays, like, I would treat them like with like call options, treat them like just speculative. They do carry some risk, but I mean, the case to be made is there.
Well, I think another theme, and this is not a 2025 thing, it's a long next 10, 15, 20 years, there's an arms race between the US and China with artificial intelligence, data centers, and quantum computing and robotics.
Oh,
And this is,
100%.
yes. So China is way ahead of the US on manufacturing and robotics, but the US has a lead on artificial intelligence algorithms. And I think China has three out of the five fastest supercomputers. So these things are all long-term tech trends and they're all related.
Yeah, and it's not gonna slow down.
Yep, but as a commodities investor, I think like it's smarter to bet on picks and shovels rather than who's designing the best artificial intelligence software.
Yeah, because you're kind of getting a catch-all with the commodities as opposed to trying to pick out the exact niche from whichever specific company that's like you said, like trying to find the next AI thing.
And robotics are actually, I think robotics are actually over the next couple of years, it looks like robotics are actually the cost on these things. You're seeing higher quality robots at lower and lower prices as a lot of the components like LiDAR and other stuff, the costs on these things come down enormously. So I think you're going to see a lot more companies with manual labor and other stuff switch to robotics.
Yeah,
There's a
make a living.
robotics ETF. You should definitely listeners should definitely pay attention to that one. Okay, well, we're a little over an hour. I want to thank you so much for your time today, Aaron. If my listeners want to check out Carnivore Trades, how do they do so?
You can find me at carnivoretrades.com or posting frequently on X, Twitter at Aaron Basil, YouTube. I do daily market wraps pretty much every day. The market's open at Carnivore Trades. Just search it up and you'll find it.